Dubai looks unstoppable, bigger, faster, bolder. But when a city grows this quickly, the real question isn't how high it can climb. It's what happens if the foundation gets stressed. Is Dubai's boom a sustainable opportunity, or a high-speed risk that hasn't surfaced yet? Dubai's numbers are hard to ignore. In 2025, the city welcomed 19.59 million international overnight visitors, according to the Dubai Department of Economy and Tourism. That is more than double the population of Los Angeles arriving in a single year. Each visitor was drawn by the city's promise of opportunity, luxury, or simply a new experience. At the same time, Dubai International Airport processed 95.2 million passengers in 2025 based on the official Dubai Airports report. That makes it the world's busiest airport for international travelers, a crossroads where flights from Asia, Europe, Africa, and beyond converge every hour. The scale is staggering, planes landing and taking off around the clock, connecting Dubai to more than 240 destinations worldwide. On the ground, the city's resident population passed 4 million in August 2025, as reported by the Dubai Statistics Center. That is a net gain of nearly 120,000 people in just 8 months. Most are expatriates, engineers, teachers, hospitality workers, and entrepreneurs drawn by new visa programs and the city's expanding economic ambitions. The population has grown by nearly 3 million since the turn of the millennium, with the pace accelerating in recent years. These three numbers, visitors, passengers, residents, form the backbone of Dubai's rapid ascent. They reflect a city that has become a magnet for capital, talent, and ambition on a scale few places can match. But with each new arrival, the stakes grow higher. The city's growth is not just a headline or a statistic, it is a daily reality, visible in crowded arrivals halls, new construction sites, and neighborhoods that seem to spring up overnight. Dubai's foundation is built on movement of people, money, and ideas, all measured in the millions, all pushing the city to redefine what is possible. Ambition in Dubai is not left to chance. In January 2023, the government launched the D33 Agenda, an official blueprint with a clear goal: double the size of Dubai's economy by 2033. The strategy calls for more than 400 initiatives, targeting everything from global trade and advanced technology to tourism and logistics. The numbers behind it are striking. D33 aims to lift Dubai's GDP from about $130 billion in 2023 to $260 billion within a decade, according to the official government platform. Policy levers are everywhere. New visa reforms have opened the doors wider than ever before. The Golden Visa and Green Visa programs now make it possible for entrepreneurs, skilled professionals, and investors to settle for the long term. Free zone rules have been overhauled, allowing 100% foreign ownership in key sectors, an invitation to global companies and talent to put down roots. These steps are not just about attracting more people, they are designed to draw capital, encourage innovation, and anchor Dubai as a place where business can move at the speed of ambition. Hilal Saeed Al-Mari, Director General of the Dubai Department of Economy and Tourism, describes D33 as a roadmap, saying it signals an ambition to double Dubai's economy by 2033 and to attract more investment and talent. The message is clear: growth is not accidental, but engineered through policy and planning. These reforms have real effects on the ground. International businesses are setting up regional headquarters. Startups are launching with fewer barriers. For expatriates, the promise of long-term security is changing the calculus of moving to Dubai. All of this feeds directly into the engines of growth, property, trade, and services, which are now primed to scale alongside the city's population and visitor numbers. The question is not whether Dubai is growing, but how these policy choices are shaping what comes next. Property is more than a backdrop in Dubai, it's the engine that turns ambition into concrete reality. Over the past 3 years, the city's real estate market has been on a tear. Prices surged from 2022 through early 2025, with prime neighborhoods seeing double-digit gains and off-plan sales reaching record highs. The numbers are striking. Nearly 19,700 new villas are expected by the end of 2025, according to Reuters and Fitch. Yet even that barely keeps pace with the influx of new residents. Developers rush to launch projects, cranes dot the skyline, and showrooms stay busy as buyers from around the world chase high rental yields and the promise of long-term value. But beneath the surface, questions are starting to form. The same pipeline of new supply that has powered Dubai's growth could bring its own risks. Agencies like Fitch and Reuters have flagged the possibility of a correction if demand cools or if the market simply gets ahead of itself. Their scenario models a price decline of up to 15%, not a prediction, but a stress test, a what if, that investors and policymakers cannot ignore. A leading real estate analyst puts it this way: "We have seen strong gains since 2022, but with a large pipeline of new supply, agencies are modeling scenarios of double-digit corrections of up to around 15%. For a city that has lived through booms and busts before, the lesson is clear: cycles matter. The property market is both opportunity and risk, and the balance can shift quickly. So, what do you think? Is Dubai's property boom built to last, or are the seeds of the next slowdown already in the ground?" Drop your thoughts in the comments below, and if you find this analysis useful, hit like and follow for more data-driven stories on the world's fastest changing cities. Dubai's skyline is a monument to momentum, but every engine has its limits. The next section puts that idea to the test, examining how financial resilience and real-world pressures could shape what comes next. Dubai's growth story is often measured in superlatives, but the real test comes when the numbers are placed under pressure. The city's public debt stood at AED 112.4 billion at the end of 2025, representing a debt-to-GDP ratio of 20.8% according to Dubai's Department of Finance. On paper, that is a manageable figure, especially with diversified revenues and steady inflows from tourism, trade, and real estate. But as one regional credit analyst puts it, AED 112.4 billion is manageable, but a synchronized slowdown tests any issuer's cash flows. If global demand wavers, or if property and tourism both cool at once, the city's fiscal buffers could be tested in ways not seen since the last cycle. For the people who call Dubai home, rapid expansion brings its own set of daily challenges. With 88% of residents classified as expatriates, the city's population surge has pushed housing and transport systems to their limits. Rents have climbed, and mid-income families increasingly face longer commutes as affordable options move further from the city's core. A resident describes it simply: "I love working in Dubai, but rent and commute times are getting longer, and that is a real pressure for my family." These strains are not unique to Dubai, but the speed of change means that solutions struggle to keep pace with demand. Room sharing, cross-emirate commutes, and crowded public transport are now part of the everyday equation for many. Physical limits are also coming into sharper focus. In the third quarter of 2024, the Dubai Electricity and Water Authority reported desalination production of 40.5 billion imperial gallons, with peak demand reaching 455 million gallons per day. Providing water for a city of 4 million in the desert requires immense energy. Desalination alone consumes 3 to 4 kilowatt hours per cubic meter. As the city grows, so does its thirst, and each new skyscraper or neighborhood adds to the load. Meanwhile, climate data from Reuters and peer-reviewed studies warn of rising wet bulb temperatures, with the Gulf region already seeing days approach the 35 degrees Celsius threshold. That is a level where outdoor work becomes dangerous, and cooling costs surge. For city planners and utility managers, these are not distant hypotheticals. They are operational realities that must be balanced against the promise of endless growth. Each of these stress tests, financial, social, environmental, interacts with the others. If growth slows, the pressure on debt, livability, and resources does not ease, it sharpens. The question is no longer just about how high Dubai can climb, but how resilient its foundations prove when the pace changes. Dubai's ambitions remain immense, and by 2033, the city aims to double its economy. But every record set in tourism, real estate, and infrastructure raises new questions about resilience. In a place built on speed, the true test may be how well foundations adapt when the pace inevitably shifts.